Eric Muathe with Muathe.com. Let's take a look at what turned Electronic Arts from an underperforming stock to suddenly explode from about 2013 to the current highs of May 2017. So what caused this slump and then this sudden explosion? All right, of course we know the minimum requirements, but let's take a look here. We can see that this movement here begins with the RSI moving to 3-year highs, which corresponds with a price breakout, and we can use this monthly closing high there in early 2012. Once it breaks out in price, that corresponds with the RSI moving to 3-year highs. Let's take a look at what the MACDs were doing. That is our second minimum requirement. So we're talking about this period here, and we can see that the MACDs did exactly what we expect them to do. We can see that the main MACD was moving to 3-year highs, and also the secondary MACD was also jumping to 3-year highs. So definitely it met the minimum requirements, which might explain why from underperforming it suddenly exploded, and this corresponds with this price breakout here in early 2013. And of course, after that explosive breakout with the minimum requirements met is when the stock started this amazing climb that has taken a couple of years. Let's take a look at another stock, and the ticker symbol is PAM. And again, here we can see underperformance over a period of years, and then suddenly it goes into this fantastic run that took a couple of years. So what changed the fortunes here? And again, we see the same minimum requirements. So let's zoom in here, and we can see that there was a movement to 3-year highs. If you take a look at this breakout right there, RSI jumps to 3-year highs, and so this is corresponding with this price breakout period. There is a monthly closing high there. We break out in price. We never look back after that breakout. Of course, RSI jumps to 3-year highs. We can see that the MACD also jumps to all-time highs, and also the main MACD moves above zero for the first time. And we can see that the secondary MACD that we look at, we only need one of the MACDs to qualify here as our minimum requirement. But here we can see that both MACDs met the minimum requirement. RSI already did break out to 3-year highs, price broke out, and after that breakout in price, we can see that the stock did change and became, for what looks like a nice momentum instrument over the last couple of years. Now let's flip the script, so to say, and take a look at periods when stocks are dropping. So we can see a good stability here and acceleration as far as EA is concerned, but it goes into this sideways action, a little bit messy here, and then whoop, that major drop. So that major drop took it from the, let's call it 50s to the lows here of about $15. So what we see here is there was RSI breaking down to multi-year lows here in about, let's call it mid 08. Of course, the general market was also in a bear market, but we can see RSI breaking down to multi-year lows. That period here, we're talking about this period right there. We can see that that corresponds also with the MACDs breaking down to multi-year lows, if not all-time lows. And we can see that the default MACD also drops for the first time substantially below zero and makes a fresh low because of all-time lows on the RSI, all-time lows on the both MACDs. We can see that what happened in 2008 looks like what can be called a crash right there. That's why, because it met our minimum requirements for the ultimate Muathe sell signal. And of course, in terms of timing, once it broke down here to fresh monthly lows sometime in 08, that was the cue that things were deteriorating, and again corresponding with the break of the RSIs and MACDs to 3-year lows. In fact, here it was all-time lows. So the same minimum requirements can be used for finding momentum ideas to the upside and for finding momentum ideas to the downside. Check the description for more information about this method. Eric Muathe, Muathe.com. As always, good luck. Peace.